Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we're going to talk about which is the best indicator. Alright, we all know that there are many indicators out there. There are like oscillators. Oscillators are like the stochastic, the RSI, the MACD. Right, there are what I call momentum indicators. Momentum indicators are like the moving averages, right? There are the Ichimoku cloud, for example. Okay, and then there are other like hand-drawn indicators. These are stuff like Fibonacci, Elliott wave, where you map it out, right? It's a little bit more. You can't just plug in a mathematical calculation for it. It requires you to really look at the charts, draw it out. Right, and then there are stuff like chart patterns, right? Chart patterns, you're looking at double top, double bottom, head and shoulders, triangles, channels, even trend lines. So for each of these indicator, right, it has a different purpose. For example, the moving averages, the Ichimoku clouds, right, they are very useful in determining the momentum of the market. Right, is something trending upwards? Is something trending downwards? Is there a little bit of a change in momentum? Right. On the other hand, stuff like the stochastic, the oscillators, stochastic, RSI, MACD, when it tends to reach one extreme or, at the top or one extreme at the bottom and looks for a reversal, right? That is not so useful in determining the momentum, but it's more useful in what you call a contrarian style of trading where you're looking for reversals. Okay. Then there are stuff, like chart patterns. Chart patterns, stuff like double top, very good in calling a breakout. Right, stuff like double bottom also very useful in calling a bullish breakout. Channels are also when you draw two like parallel trend lines. All right, they're very good in determining like trends, which effectively is momentum. All right, so you notice that many of these indicators serve different purposes. Okay, and the trick here. And the trick here on what is the best indicator is actually none of them are the best indicator. Instead, it is a combination of indicators that makes them effective. Okay, what do I mean by that? For example, we all know that when it comes to using moving averages to trade, right, it usually doesn't work out that well. Right, it works when the markets are trending. But once the market stops trending, that's where it starts to take heavy losses. Right? It's a momentum style trading strategy. Now, how can you improve, for example, a moving average trading strategy? One way, right? Imagine you're just using a moving average. You're buying every time price touches the moving averages and it bounces up. So it's kind of like a trend. It's a trend trading strategy. And one way you can improve that is to combine another indicator like the channels. Right? Channels are more like hand-drawn indicators than mathematical calculations you can just put on. But I draw a channel. Right? The channel is ascending, so what I call bullish channel. And if the channel is ascending and price is also above the moving average, you now have a higher chance that price, will continue rising. That increases your chances of being correct, continuously. Right, and then you throw on one more, maybe throw on the Ichimoku cloud, right, which just kind of paints the Ichimoku cloud onto the chart. And if price is above the cloud, it's usually a good indication that there's bullish momentum. So now you got three different angles to a market. You have the moving average, which is usually is pretty basic. You have the channel, which if it's in your favor, that's great. So you can imagine you have one checkbox done, you have two checkboxes that are ticked, and then the third checkbox, Ichimoku cloud, is a different variation of calculating momentum. And if it's in your favor, price is above it, right, it is bullish, right? So you have the third checkbox that is done. So you're not kind of like looking through a tunnel vision and just analyzing the markets using one particular strategy. But instead, three different strategies from three different studies are all agreeing with your view. So that increases your chance of being correct. Okay? Then you can throw in stuff like ADX, right? ADX is average directional index. Basically, it calculates the strength of a trend. So you know when is roughly going to the strength of a trend is going to start to weaken, right? I believe the MACD indicator has some form of calculating that too, right? But the important thing that we want to consider here is that you can't just use a single indicator, right, to trade. That is pretty dangerous. Instead, you need to combine multiple indicators together to give yourself the best chance of being correct more often than not, to have the edge over the market, right? So in our example, if you want to avoid times where the market stops trending, right, and because we have a momentum trading strategy, right, we end up losing if the market stops trending. Then we look out for stuff instead of waiting for the price to always just trade when price is based on the moving average. We can choose to trade only when price is within the channel, right? So the moment price breaks the bullish channel that we were thinking or talking about, right, then we know that, hey, it's not really trending anymore. I will wait for price to go into another channel before I trade. All right, so that helps you avoid, right? That helps you avoid times when markets are not trending, right? You can use channels, you can use Ichimoku, you can use divergence, you can use a lot of different things, right? To rather use the strength of these other indicators to help you strengthen your original strategies, because the reason for that is usually each indicator has its strength and has its weaknesses. What you can do is you can supplement the weaknesses of the trading strategy you have, right, with other indicators. Okay? Anyway, guys, that's it from me for today's podcast on which is the best indicator you can use in trading, right? The key takeaway that I want you guys to know is, there's no single best indicator. Instead, it's the smart and intelligent combination of indicators that really helps you make and create a robust trading strategy. Now, do remember to subscribe to our podcast, as here at IronFX, we're dedicated to bring you the very best trading education to take your trading to the next level. Now, until then, stay safe, trade safe, and peace out, guys.